Welcome to Overnight Success, the podcast where we celebrate the incredible journeys of entrepreneurs and visionaries. While there's no such thing as true overnight success, hearing their stories of determination, persistence, and resilience can inspire us all. Presented by Draper University and hosted by Joannou.
I want to quickly mention that none of this is investment advice or financial advice, trading advice, or any sort of advice. And we do not recommend any cryptocurrency or investing in any projects. We're just showcasing the stories of founders.
Hey, Yael, welcome to the show. How you doing?
Great. How are you?
Very well, very well. I'm very excited to hear about SolidBlock and all things kind of blockchain and real estate today. Probably the first guests that we've had join us to talk about, this kind of business model, and some super intriguing, and just love how blockchain is enabling a bunch of new use cases, and real estate being a really cool one. Before I kind of jump into SolidBlock and everything you're doing at the moment, I like to go back a little bit, give a little bit of context for the audience. And so you can go back as far as you like, but I'd love to first kind of understand when you first realized you're entrepreneur. That's usually where I start. Yeah.
That's really, really interesting question, actually. First time I realized I was an entrepreneur. So where I grew up, which was Ukraine, early Soviet Union, actually, where I was born and raised, and until the age of 7, I was, I guess, the first grade in the country, which did not experience joining the pioneers, or even the one before. They have like the October kids or whatever. So we were the first grade that did not go through the indoctrination, and so I did get to experience, to a certain extent, growing up, kind of the Western influence, the Western culture. We were the first to really openly listen to Western music and stuff like that, right? Where my parents had to do this kind of, in a hush hush and the speakeasy type of environment, right? And at the same time, when the Soviet Union broke apart in the late 80s, when I was just going to school, the whole country experienced like this huge hyperinflation, and nobody knew how to handle money, because all of a sudden you have foreign currencies, and of course they didn't know how to privatize assets and stuff like that. And so when I was in school, and it's interesting because back in the day, when I was 7 years old, I would travel for hours on a bus every day to school and come back, and it was all safe and everything. But after school, we'd go and buy ice cream with our own money. The parents would give us money on the way to the bus. And I remember one day I get like this banknote of like 1 million. And then the day after, literally, I get the banknote of 10 million. And so it would just escalate. And we're like, what is this? Like, what is this money? How much does the ice cream really cost? So it kind of hit us at that early age. Is like, this piece of paper is literally worthless, or it does not have any inherent value. We don't even know what it's based on. Somehow the sellers of ice cream know how much they need to charge us, So at that point, my father was doing his PhD in physics, and he dropped out and started a business because he could finally start a business. And he would just go from one thing to the other, trying out from packaging candy for kids. And I remember I would actually go to the place where him and his friends would be sitting there kind of wrapping different things, and I would help out, and then they would actually pay me. I remember my first salary was like I don't know if it was actually 3 hryvnias and 50 cents, or it was 3 million. I don't know at that point anymore. And I remember buying for the first time kind of a toy with my own money. So that's kind of a precursor of me being an employee, right? Not really an entrepreneur. But my dad was kind of an entrepreneurial from early on. And as soon as they could, him and his friends were doing business. And, at that point, the country was just kind of going through this major transition, and whoever could jump on an opportunity and grab some sort of an industry where they could kind of excel. So I did witness that. But then I kind of went into a different direction, because I ended up winning a contest and going to the US for high school and college on my own. And I had to make money to stay in college. I managed to get a lot of scholarships. So thanks to the American government, my education was paid for, and to some private foundations. But I still had to make money for living expenses. And at that point, doing a business just did not occur to me. And that was early 2000s. So online businesses, online things just kind of started, but it was just not on our agenda, on our mind in America. In America, it was very much like, and which is surprising. In Ukraine, it was all business, but in America, it was all get a job, and make a lot of money, save money, buy real estate, stuff like that. So I worked a lot of jobs. I worked in Wall Street even. And at some point, I even worked on Wall Street under the table, which is, so I probably should not mention that. But, I not really under the table, but, I was just basically, working and making money whichever way I could. And so at the end of the day, I ended up getting a job offer to stay in the US, but my heart was really in Israel. I visited it a few times. And one of the things I did in the early 2000s was read a book about Israel as a startup. It's called Startup Nation, and how the government made all these changes to allow entrepreneurs to allow startups to grow and corporations to come and stuff like that, and transform from the kibbutz nation in the 60s and 70s to a startup nation in the 80s, 90s, and so on. And so, it wrote that Israel had more startups on NASDAQ at that time than any other country outside of US and Canada. And so when I moved to Israel, everybody seemed to have a startup at that point. It was like 2005. And every cab driver had a startup. And just basically everybody out of the army had a startup. It's just like penetrated this whole reality to a huge extent. I didn't end up having my own business until I was in the late 20s. I ended up doing, I had to establish myself from zero and again, pay rent and stuff like that. So, but I did work in an M&A companies, which bought and sold startups and bought and sold businesses, bought and sold real estate. And we would travel to Eastern Europe to buy farms, and we would negotiate with tea companies and for acquisitions. And then we facilitated an IPO for real estate, for the largest real estate developer. And so I was always around startups. And actually I wrote a paper, which the whole company used on early startup valuation. And I started doing a PhD on what makes VCs successful in startup funding at the Tel Aviv University, which I ended up putting on hold because I co-founded a VC fund, or at least helped found a VC fund, I should say, and then joined a hedge fund. So basically, I did a lot of stuff at the same time, but not a startup yet. And when I joined the hedge fund, the owner of the hedge fund was like, "You can do whatever you want. You want to start a startup on the side? Just do that. It doesn't bother me." So I ended up creating a startup with a friend, which was supposed to be very similar to something cross between Monday.com and Slack, but for social and kind of goals and self-development, personal development. And so we raised some funding, and we were on a good path. But I think the biggest mistake I made was just staying and working and being comfortable working at the hedge fund while I was doing the startup. So, right. After that, I caught the bug and I said, I really want to continue this at every opportunity. And so that was the beginning of my journey as an entrepreneur.
Amazing. I mean, we've got so much to dig in there. Israel, right? It's funny because my buddy from Israel gave me that book in Silicon Valley at a conference. I haven't read it yet. I'm sorry, Shahar. I will read it. But the Startup Nation, right? I know, I always knew that there was a lot of entrepreneurial spirit. And the way you kind of are saying that reminds me very much of Silicon Valley and my first experiences with going to Silicon Valley and having sitting at the bus stop and just having two teenagers talk about, valuations, and you're just like, where the hell am I? Right. But what was it like? So was it just that energy that drew you to Israel? What was it that kind of, you felt to get there?
Yeah, so for a Jewish person growing up in Ukraine, there's only like 2 or 3 things for you to do because it was just not, staying staying put was not an option. You either would go to Israel at a certain point, or maybe to Germany, or America was not open for most people, and so I ended up kind of escaping to America, which was unusual in some ways. But basically, when I was in America, I was on a student visa, and the condition of my scholarships for high school was that I would have to go back home after studies and 1 year of work, which I completed at this broker dealer on Wall Street. So basically, I had to go back, and obviously I wouldn't go back to Ukraine, and so I just immigrated to Israel. But I was always drawn to the country every time I would visit, and I think mainly because, first of all, it felt like family, but also I like the independence. I like the spirit. I like the chutzpah. I probably like it a little less now, but back then it was quite unusual. And I'm really happy that I moved here, in fact, because it exposed me to this world of startups. It probably would have been the same if I moved to, let's say, the Silicon Valley, or kind of the clusters of startup. Now in America, you have many more. You have Atlanta, you have almost also Miami, like almost every town now has this startup environment, even in New York. Back then, it was not as pronounced, actually. It was just very early 2000s. And I think startups were really concentrated in the Silicon Valley in the US.
And so why Wall Street, M&A, lots of I guess, safe, probably a lot more money? Was it just the chaos? I'm always just curious how people with super sound jobs or track record like that, build startups.
Yeah. So, I started in that field because I studied economics. And for me, finance was always very interesting, especially the whole history of money and how money is basically passes from one state to the other, and between assets and liquidity and so on and so forth. It was always super interesting for me, and the whole startup financing was super interesting to me for that reason, because it seems like a bunch of people are getting together, but over time, not all at the same time, like in a normal business. Like you have partners that in many businesses, you say, we like each other, we work well together, and we have some capital that we've accumulated. Let's put it in a common pot and let's go and develop something, right? That was before VCs. And so in the presence of VCs and then angel investors and funds and this whole kind of incubation of startup from zero to whatever, you can get together with someone and say, let's just put our energy and our time, and then someone else will put in the money. So that was super interesting to me, and I've always been a student of that. And so the M&A kind of prepared me for the whole world of structuring that you can. It's something that I discovered recently, actually, that even with a startup, you apparently have so many possibilities of going forward, and not just the traditional kind of different rounds one by one, but there's a lot to it. And I think there is a lack of that knowledge and a lack of that knowledge transfer. So you guys at Draper University, I don't know if you have a course on that, on startup, the startup finance and different stages, how much equity you should be holding as founders, what the statistics looks like, what are the best startups doing out there, what are some creative ways of funding startups in times when there's no liquidity, what is a way to incorporate M&A into, there's just so much. And I wish I didn't have to learn from my own mistakes, right? But now I could probably teach some of these things. But yeah, so this is that it did give me a good foundation for what we're doing today at SolidBlock. So I think everything you kind of learned throughout your career and throughout your life and your experiences definitely inform your business and the way and your products, right? So I think that literally everything I've done in my career has informed what I'm doing today.
Absolutely. So jumping on to SolidBlock, right? Well, I guess before that, right? Blockchain, right? The second question I always ask the guests, and I might do some sort of compilation at some point, is like, when did you go have that aha moment with blockchain? I'd love to hear it.
Yeah, so I heard about blockchain, I think or Bitcoin, I should say, for the first time from a friend of mine, and Yael, who co-founded Bancor. And that was maybe like 2013, 14, just like when it started. And he said to me, like, this is the biggest thing that's coming up. And I looked into it, but working in a hedge fund and like in a very financial group that was very focused on traditional finance, and I was doing structured products there. If we were not really allowed to touch that, and I didn't explore that to the greatest extent. And I had a different business at the time, which was not related to finance. I created an import-export business on the side, to do passive income with supplements. And I also had after that, I had a digital marketing agency, which actually was very successful because it caught enterprises right at the time where social media was taking off for that, like 2013, 14 maybe. And so I worked with lots of small businesses, just arranging their social media and stuff like that. And so I wasn't really following. But then the financial group where I was working ended up shutting down because of money laundering. And I had found myself kind of being disillusioned with this whole financial industry. And I was supposed to have I was promised to have some bonuses and funds and like a common fund that the company was opening for retail investors and stuff like that. So I was like, so all of these things don't matter. All of these contracts don't matter if there's nobody out there to pay them, And then I was like, okay, let's look into this thing. Like, why is this so interesting? So at first I didn't really identify with crypto that much. And so I just went into blockchain. I found it fascinating, the whole idea of smart contracts. I was fascinated with that. So basically, I converted my marketing agency into a marketing agency for ICOs and for enterprises as well. And so we ended up consulting a bunch of enterprises for blockchain transformation. So literally creating strategies of how they can use their products within the blockchain setting or for blockchain clients. So one example was a security company, which basically was not really, we created MPC, multi-party computation, called Unbound Technologies. And so for them, we created a strategy which ultimately showed them what they need to do and which companies they need to go to and sell to and partner with and which channels and so forth. Ultimately, they ended up going full blockchain and selling to Coinbase right before the slump of last year. So after basically in my marketing company, we supported about 7 successful ICOs that were not scams. And I was adamant I was pretty good at due diligence, having been at a VC and M&A and stuff like that. So we only took projects where we could see that the founders are doing it for real. And some of them raised a lot of money, millions, hundreds of millions, and so on. And so as ICOs were just basically banned in the US, and there was a crackdown and the whole market went, overnight, nosedive. I was like, wait a minute, but this is an amazing tech. The fundraise with ICOs, the reason why it's so successful is because it gets rid of all the unnecessary things. It's so simple. Why doesn't every startup do it this way and just use a different instrument instead of splitting this future market or future revenues or whatever? You should creating these economic models that in many times were not based on the real world operation of things. But we already have an instrument that works. We have securities. And yes, they have a lot of limitations. Yes, they have a lot of compliance, but the technology can be used just the same. So that kind of a revelation that came to me in 2018. I created a startup that was going to put securities on the blockchain and wanted to start with a real estate space. And at that point, I met my ex-co-founder, Yuval, who founded SolidBlock. And we ended up working together for 3 years. and creating basically the best well-known brand in the real estate tokenization space. And now we're on a path to expand into the distribution, which is what I really liked about the ICO. The whole idea of affiliation, right? With the ICOs, a friend could bring a friend and get a percentage, or syndicators. There were so many people that just specialize in bringing their investor groups, right? And they would always earn on that. And that's basically, in the securities world, that's not possible unless you're a broker, unless you're licensed, at least in the United States. So lately we thought, why don't we do the same, but in the security space and for brokers? And that's what's missing in the security token market, in the security token space, this affiliation network. And if anybody can pull it off, that would be us, because we understand compliance and finance and economics, fundraise, technology, blockchain, crypto, you name it. So we partnered up with a broker dealer in the Valley called Viant, and now we're here.
Incredible. I've got a separate question I'm going to ask you about the affiliation bit, but I just wanted to go a little bit into SolidBlock, right? And some of the projects you have there, right? Because it's incredible, the size of some of these things. And I'd love to just hear as I'm looking at it, I'm like, this is like a pain in the ass. I'm thinking like, this is really hard work. It must be to kind of, you're selling big people on giving the property to you, or at least a portion of the property. Then you've got to find buyers. Obviously you're building up over time, I'm just saying, but I'm 100%, sure it's going to work for you. I'm just curious as to getting that early traction and getting those first projects on board. I'd love to hear how it all came together.
Sure. So you're absolutely right, Chris. In fact, it's a lot of work to build a marketplace, and that was what we were building in the beginning, and which means finding owners of properties and then finding investors for those properties, being a startup and a fundraising company at the same time, not being licensed at that point. So we found a really interesting model, not interesting, but an easy model to follow, where we would actually become the underwriters, so to speak, and as an issuer and partner up with issuers, as that in the security space, you don't need to be a broker dealer to distribute. At the same time, we took on an enormous amount of risk, and it took a long time to basically onboard such clients. And it worked in the early phases, because we were able to onboard about 5 projects and issue coins. And they were actually our own tokens, and where we partnered with issuers, meaning with real estate owners. So you're absolutely right. In the early stages, we realized it was an impossible task that was also not very scalable. And in startups, that's another thing that I think is under-taught in most environments and books. Obviously, most startup owners probably read the Startup Almanac and also the, a lean startup and stuff like that. And I think one of the major things that I realized only maybe the last year or year and a half is that it's all about the unit economics, and it's all about understanding what it is and then being able to show how you improve the numbers in the formula in order to scale. And so with the model that we used, when we looked at the formula and we looked at the business model, we understood that we just cannot scale that. So the unit economics is basically the fixed cost plus numerator and denominator. Numerator is the fixed cost plus the variable costs, both of them per unit. So you would, let's say, assume that you are going to do, let's say, sell 2 projects per month, because you cannot execute more, because it requires a lot of the labor force to do all of that. So you take the fixed cost of the company divided by 2, because that's the only project that you have, right? And then you add the variable cost, how much it costs you to execute, and then you divide it by your revenue, right? So on paper, we would probably break even with that within a year maybe or so, but there's just no scalability in that, because you really need to have, in order to reduce that fixed cost thing, the variable you can reduce, but the fixed one, you have to do as many projects as you can, right? So once I kind of realized that, and there was actually a company called fractional CFO company that we hired to advise and worked with them on this. And I was like, wow, this is crazy. How was I not aware of this mathematically? And so I was like, we cannot do this. We have to find a way to do many more projects. So we'll go back to being the tech provider. But then as a tech provider, we cannot take a percentage or a fee because that would go into the broker-dealer category. So for a while, we were doing, onboarding clients to do just tech and being able to earn very little. So then your revenue goes down, right? So if your revenue goes down, then your unit cost remains very high, right? Because your denominator is low, right? So then we sat down again and we're like, okay, how can we just change all that again so that we can become a unicorn? Well, we need to become a broker-dealer or merge with a broker-dealer and start doing that. Now, additionally, we got interest from over 3,000 clients and signed just those that fit. Why? Because we didn't do any fundraising. And also because there's very low liquidity and fundraising available in this market. So we said, in order for us to complete the picture and to onboard any client, we need to go ahead and say, if there is none of that right now, then we'll be responsible for creating it. And since we're super connected, have been in the market since the early days, and friends with everyone, and we never looked at anybody in the industry as competitors rather than as friends, which proved very good because we now are not competing with any marketplaces. We're actually partnering, and a few of them are Draper network investments. So we are actually bringing their projects on board or their investors on board through our kind of connector platform. And so in the end of the day, this strategy really paid off. But yeah, the road to where we are right now was, through different models. But I guess you just never give up until you get there.
Absolutely. That's, I love hearing that. And I love you plugging Draper along the way as well. Thank you very much as we go.
Well, we are a Draper portfolio company too. So for disclaimer, right? But yeah.
Oh, good. Oh, great. I saw that Bangor, we were in Bangor as well. So I just.
Yeah, Bangor are good friends of mine. So besides Yael, friends with team and so in Israel there are a lot of blockchain companies in the early days, and I think that Draper network was responsible for funding so many good blockchain companies actually. So we're very grateful.
That's great. So you've kind of figured out the model a little bit. I imagine it's also one of those kind of scenarios where, like, the more projects you get on, the more reputation you have, the easier it is to kind of close the next lot. You get, the trust is being built. Imagine that in the difficulty of all that, kind of as you're trying to, work it out, and probably just super focus on the business, not to look at typical kind of founder stuff, but that you also have the difficulty of, like, if the market goes to shit, right? Then people are like, oh, it's crypto and it's a scam, and then I'm not going to use your property platform. It was
hard for institutions, but also imagine there's nothing typical about a startup, I think, in the early days, because we raised the funding literally a month before COVID started globally, and everybody went home, and we tried to work with figuring out how to put kids on Zoom. And we are older than maybe the majority of the US founders. In Israel, you have two kinds of founders, some that are straight from the army, from like special units, and then others that are kind of in their 40s that have worked in a specific industry and then created a startup. And so we belong to the latter. And so figuring out, my co-founder has 5 children, I have 2, and we were trying to figure out how to put them through Zoom at the same time, figuring out how to do all the work at night and stuff like that. It was insane. Beyond that, there's also markets going down, and which didn't make it easier for us to sell. So I looked into the stats of how many phone calls I did in those days. The one good thing that it brought, however, is that people were much more open to investing without meeting somebody in person. They were much more open to investing without having that startup in that area. because I think before 2019-20, most investors really wanted to invest in a startup that was next to them. And that started changing. And then finally, people were open to doing business online, and they were not open to doing business without meeting somebody before. And we really have to thank COVID for that. And, it opened a lot of doors. As much as it was difficult, it was also interesting because people were willing to meet on Zoom all day long. And so I looked into the stats, and I literally did like 15 phone calls a day, half an hour phone call each. And I probably spoke to about 2,000 to 2,500 people over 2 years or so, different REITs, the real estate developers and institutions. If, when I'm on a call with somebody and they say, do you know so-and-so? And I know this name sounds familiar and I don't always remember if I haven't spoken to them or met them several times, but I will look into my email, and I will find communication on a phone call with everybody. So that was probably an overkill, but in retrospect, everybody heard about SolidBlock and everybody heard about tokenization. And now in 2022, actually, all the major, now we're in 2023, but last year, all the major institutions tokenized something. So JP Morgan, BlackRock, Morgan Stanley, everybody used tokenization for something, open tokenization departments. A lot of places, even like Moody's and rating agencies, everybody started getting interested in tokenization. And in January, Goldman Sachs opened or released their tokenization platform, but more for bank type of products, banks and tokenizing bonds. So, we have a research that we do periodically on all the institutions that use tokenization. And it's incredible because once again, sadly, I think, well, happily for them, but sadly, the main market is not taking advantage of that. And the institutions are earning a lot. They are saving, basically there was a study by HSBC, they're saving between 60 and 80% on securitization costs with blockchain. And everybody should be benefiting from that. Every company, every project that raises money should lower the cost of capital for themselves and not leave that only to the institutions.
Yeah, amazing. Yeah, I mean, I wouldn't be employed, right? Because I started coming on to run APAC from Melbourne during the pandemic, because I couldn't literally get to Silicon Valley anyway, right? But yeah, so I'm kind of, blessed by the craziness of it all, I suppose. Now, SolidBlock, right? So really cool properties, really cool. You've kind of figured out the model. I think you're kind of set up for success. And I think we're hopefully, about to get into this kind of third wave, fourth wave, I've lost count. And I think it's kind of the OGs, however you want to call it, people that are hustled through like yourself that are, really well suited to kind of, get the big wins. So I'm championing you. I don't know the word right now. But
Rooting for us. Yeah.
Rooting for you. Exactly. But can you go through like some of the benefits of the platform to the consumer and just for anyone that's interested in learning about SolidBlock?
Sure.
From a customer.
Yeah. So right now we are not geared towards like an average investor. We also noticed that in this environment, the conversion rate for investors is not as high as, let's say, in crowdfunding and things like that, crowdfunding websites. And because everybody's a little bit hesitant towards towards the market, right? So what we envision is for brokers and syndicators to be able to bring their investors that trust them, and obviously they vet every investment for them, and so on and so forth. And then they use the wisdom of the crowd, and broker brings a broker type of thing, the affiliate network. So if any investor, startup investor is interested, we are opening a new round soon. And as soon as we finalize the whole M&A deal with the broker dealer, and if anybody out there has a real estate project or a corporation even that they want to tokenize, right now we mainly deal with real estate directly, but brokers can select projects that they want to add from any industry, basically. So if you're a broker dealer, or if you are a syndicator, you can sign up on the platform and bring your network and forever benefit from the network, because we're using blockchain to split commissions for brokers and syndicators. So if you brought investors for your projects and you're willing for them to experience other projects that you join, you're forever going to get a commission from that investor. And your investors are only yours. And on top of that, if you're a real estate investor, in general, if you're looking to invest, we are working with a number of marketplaces that we can send these investors to. So, and if you generally want to learn about tokenization and securities and blockchain and whatnot, we have a lot of educational resources. We have a course called Tokenization 101. We have a very prolific blog that talks about real estate and evolution. I'm also finishing up a book on just the history of real estate from the beginning to today, which also includes all the benefits of the DeFi market and basically lending against security tokens, which is going to be the next wave, followed by aggregation and indexing, these AI influenced structured products where you can basically trade portfolios instead of assets. And that's going to be a much better kind of stable coin backing and a mechanism for transferring value from one place to the other. So we'll see a lot of really interesting financial constructs in the next year or two. It's going to be really exciting. It's accelerating as well.
Agreed. And I'm just checking out the podcast too. I've interviewed May, Mahbub, and Irina. Yeah, that's like those two already. So I got to go check out the podcast for sure. Amazing. And we'll definitely, make sure I nudge everyone about your fundraising. And then I did want to kind of sidetrack for a second, and I'm mindful of your time, so I'll try and wrap that up after that. The concept of the affiliation, right? Is there been any thought, or like, I just haven't seen anyone do this? Maybe it's because I want to do it, and hopefully you want to do it too, because if you were making 15 calls a day, you were in sales, kind of BD like me, where there's a way to track deals and referrals or introductions from like a sales software perspective, or is there anything out there that's doing that? Because I'm super keen to learn.
So first of all, the affiliation is working really well for NFTs, right? So because it's just embedded in royalties, they don't even call it affiliation, but there are affiliate networks for NFTs, and there are some marketplaces out there that actually embed affiliation, right? So if you invested in an NFT, you want to earn more money from it, you can spread the word, and you're going to get these royalties. And afterwards, there's a waterfall every time this NFT changes hands, right? So that was very successful, which brought the NFT market to where it was, right, before the fall. And if you look at every single kind of digital product, even before Bitcoin or blockchain and so on and so forth, even Nike shoes or eBay or Amazon, or now that you have social media driven marketing, pretty much every influencer affiliates with a bunch of products, right? So just affiliate marketing is the way to sell. And it existed even before the internet, right? And like Herbalife, which was fueled these MLM models back in the day, where I don't even know if like Girl Scout cookies use this model, right? But literally spreading sugar and diabetes to the world. Well, we want to bring the best and highest quality securities to the world that are being spread through the network, and using the network to sell much faster and much more efficiently and cost efficiently, at the same time supporting the industry of brokers that are still needed, because they are the sales force for securities. They have a way to evaluate something. It's kind of like real estate agents. A lot of people are saying, well, we don't need real estate agents anymore because now we can see real estate in the metaverse and then just buy it. That would work if you just had like 10 apartments to look through. But even in the Kawasaki book, real estate or something, Rich Dad Poor Dad, whatever, like he's saying, Robert Kiyosaki is saying that if you really want to find something that's suited to you and to your needs, hire somebody who will be able to sift through all the stuff that's out there and then show you just a couple. So like real estate agents are not going anywhere unless there is an AI and robot eventually that is able to change that. And the same thing with the brokers, that this is their job and they're evaluating a bunch of deals and then they're choosing to participate in a few, and they'll be able to lower risks and participate in more deals and bring investors specifically to the deals they think that are fitted to them.
Yeah, absolutely. I was thinking more of like, rewarding people, because it's just kind of like sometimes, people give you this brilliant introduction and you mean well, but like maybe the deal doesn't take 2 years, and then you're like, oh, you never gave me that. You never gave me
anything. You forgot. It has happened. Yeah.
Yeah.
Even as a startup. Yeah.
Yeah. Plus, I'm a big believer in like indirect kind of introductions being super helpful, rather than me just tell you how good I am. Somebody else tell you how good you are. It's helpful. Yeah.
No, you're absolutely right, Chris. I didn't even mention that. When you're introducing someone, when where the brokers work together, there's always one who's the main broker, and he's the one who's getting the funds. And so the other one is in the dark. He has no idea if his investors invested. He feels bad about going to investor and saying, did you put the money in? How much did you put in? There's zero visibility. With digital securities, everything is visible and transparent. And the waterfalls are going automatically and straight to the people who helped make the deal. And so if you brought us an investor invested right now in this moment, you're going to get your cut. You're going to get full data like you would usually would in an affiliate network, an affiliate networking platform. You'll see where the money came from, which product, who converted. You'll get a bunch of information about which source and so on and so forth. So brokers are no longer going to operate in. Right now, they're operating through email and back and forth and no visibility. And you have to spend a lot of time and effort on collections. Like you said, you never told me you got the money. And by the way, this could happen inadvertently, because if I'm not doing a good job writing down who introduced the investor, and sometimes investor can be introduced by several people and you never know, but in blockchain, who introduced him first, right? In the smart contract. So it sounds like smart contract and blockchain was built for this, frankly. So there's a good fit.
Yael, thank you very much for joining me. Super interesting conversation. Yeah, I knew it was the minute you started talking about your childhood and stuff, and the packaging up the canning stuff. It's really amazing. Loved every minute of it. Best of luck with SolidBlock. I know you don't need it. And let me know how I can help. I'm happy to do so. And thank you for jumping on.
Chris. All right. Have a good day.
Thank you for listening to Overnight Success. We hope you enjoyed hearing from our guests and learning about their inspiring journeys. If you found this episode helpful, please subscribe and share it with your friends. And remember, with hard work and dedication, anything is possible.